It's a little weird how controversial these things are, but in this video, I'll basically be going over Kamala Harris's economic policy in three parts. So that's individual taxes, investment taxes, and then corporate taxes. And we're going to be starting with individual tax changes. And I say controversial because these economic related or political videos are the ones I get the most dislikes on. But without further ado, let's cover individual tax changes. So one of the first things I want to mention is maybe you guys remember back in 2017, Donald Trump passed the Tax Cuts and Jobs Act, which basically lowered the tax rates for individuals and businesses. So that's actually set to expire this year. And Kamala Harris seems to be of the position that she wants to let that expire, so she supports letting them expire, which would mean our tax rates would return to pre-2017 tax rates. So I'm going to bring up a chart of what the current tax rates are, what the proposed tax rates, basically reverting it to pre-2017, what those tax rates are. And it's going to be current tax rates on the most left, proposed tax rates in the middle, and then on the most right is basically what income level you need to be in for those tax rates to apply to you. So as you can see, there are 7 different tax rates. And I'm going to go through this fairly quickly, but let's say at the top, you can see there's no change when you're in that income bracket of $0 to 11,600. So current tax rate is 10%, and it's going to remain 10%. But you can see 12% is going to go up to 15%, 22% to 25%, 24% to 28%, 32 to 33%, 35% to 35%, so there's no change there. And then for the highest tax bracket, you're going to have 37% to 39.6%. So really, this is going to be increases mostly across the board, and is basically going to be increased taxes for the majority of Americans. And that's pretty much it for income tax changes. So moving on to the second part is Kamala Harris is actually proposing a down payment assistance for home buyers, and that's an offer of up to $25,000 in down payment assistance to the first 400,000 first generation home buyers, or buyers who currently do not own a home. In addition to that, she wants to provide a $10,000 tax credit to first time home buyers, giving people more financial support when buying their first home. Then there's also the third one, which is the child tax credit increase. So she plans to raise the child tax credit from $2,000 to $6,000. What this means is if you have a child, this could basically be a significant increase in tax savings for you. By comparison, and I know this is a video covering Kamala Harris, but the Trump administration is also considering an increase, though their proposal would raise the credit to $5,000, so it's actually not too much of a difference. Now, the last thing for this section is number 4 is the elimination of income tax on tips. And this one is basically removing income tax on earnings from tips. So this would benefit workers in industries such as people who work in restaurants, coffee shops, or other service-oriented jobs wherever you get tips as a compensation. So whoever earns tips as part of their income, this could actually mean that you would no longer be taxed on that money that you earned on tips. Moving on to investment tax changes. For investment tax changes, Kamala Harris is proposing 2 major changes. First, an increase in capital gains tax, and a second, a tax on unrealized gains. So the increase on capital gains tax, that means she wants to raise the top capital gains tax rate from our current 20% to a 44.6%. Capital gains here refers to the profit that you make from investments like stocks or real estate. So from 20% to 44.6%, that's actually a very significant increase. Now, tax on unrealized gains. Kamala Harris is also proposing a 25% tax on unrealized capital gains for certain high net worth individuals. For example, you must be a person with over 100 million in net worth. So just to back up a little bit here, some people may not be aware of what an unrealized gain is. So there's 2 things here. There's realized gains and unrealized gains. The difference between them is actually simply whether it's currently being held by you or if you sell it. Let's say, for an example, if you own a house that, let's say, you bought for $300,000, but now you check Zillow or Redfin, whatever valuation website you like to look at, and that says it's worth $400,000 now. Or let's say the actual valuation of your house is now $400,000. That means you have made $100,000 in unrealized gains. So it's not money or cash in your pocket, it's just kind of imaginary at this point, but likely you could actually earn $100,000 on this house if you chose to sell it. Now, the difference from that unrealized gain to a realized gain is if in that same situation, now it's worth $400,000, and you decide to sell it and you receive that $100,000 in profit. That makes it a realized gain. What our current law says is that you only have to pay taxes on realized gains once you actually make money, make physical money on the sale or the transaction. In this proposal, you're going to owe taxes just because your home had appreciated in value, even before you receive any actual cash or have even conducted any transaction. But again, just as a reminder, this will only apply to people who have $100 million in net worth or more. And that's all we have for investment tax changes. So moving on to the final section, which are corporate tax changes. Lastly, Kamala Harris is also proposing to raise taxes on corporations by increasing the corporate tax rate from 21% to 28%. And corporate taxes operate on a double taxation system. So what that means is that corporations are taxed on their profits at the corporate level. If a company earns $1 million in profit, if it currently pays 21% in taxes, that means they have $790,000 left in profit. Under Kamala Harris's plan, the corporate tax rate would increase to 28%. So instead of $790,000, they would have $720,000 after taxes. Now, what happens is once the corporation has actually paid its taxes, the remaining profit is then distributed to their shareholders, let's say their owners. So if you're a shareholder and owner, you basically receive a portion of that $720,000 of profit. But then again, on the individual basis, you would be taxed again. And this would not be corporate tax rates. You would be taxed at whatever your individual income tax rate would be, whatever your personal tax bracket. So that means corporations and their owners are taxed a total of 2 times here. Once at the corporate level, and then once at the individual level when the profits are distributed. So I know that was a good amount of information, so I'm going to wrap this up with a summary and conclusion. But Kamala Harris's tax proposals, again, focus on 3 areas: individual taxes, investment taxes, and corporate taxes. On the individual side, her proposals include tax credits for first-time home owners, first-time home buyers, an increase in the child tax credit, removal of taxes on tips, and a potential return to pre-2017 tax rates, which are higher taxes for most people. For investors, she plans to significantly raise capital gains taxes and also introduce a new tax on unrealized capital gains. For the ultra-wealthy, corporations would also see a tax increase from 21% to 28%. And that's about all I have to say for this video. Let me know down in the comments below what you think about these proposals. And as usual, please subscribe, like, and I thank you so much for watching.